All right, welcome everybody. We're so glad everybody could join us today. Debbie Bloom is here. She is the head underwriter for us, and she's at Atlantic Coast Mortgage. And so, anytime I break something, I usually call Debbie. She's the one that actually helps me fix just about everything that's going on, and she's a wonderful resource for me. I know that you think that I'm perfect and I don't break anything, but that's just not simply the case. It does happen periodically. And so Debbie is the one that actually helps me get that done. And today we're going to be talking about veterans loans. And so tell us, Debbie, what kind of percentage of loans do we do that are veterans loans as a company?
As a company, we actually do a lot given the market we're in. So I would say I have not done the data recently on it, but over 25% of our loans are veteran loans.
Yeah, and
Uh,
that's a very specific loan because it's a huge benefit for the veteran as they're buying a home. It's part of the GI Bill, right? So, what do you see as far as some of the characteristics of the buyers that are coming in that are veterans?
well, we're getting a lot of higher DTIs, things of that nature right now on VA loans. The VA loan has a very broad spectrum. The general overarching directive from VA to us is we want to do loans for veterans. So we do reach out to the local VA offices just to go over scenarios and things of that nature. Every time they will side with the veteran. So if you have a complex situation with a veteran, don't think because it doesn't fit into the cookie cutter guideline that we won't be able to do it. There is actually a lot of latitude within lending for VA.
And
There
that's
actually,
actually a very interesting point because I remember one time where we had not, with a veteran where the veteran didn't necessarily fit perfectly and he was getting denied from another company. And we were able to, come in and kind of put the brass knuckles on and go into the VA and actually find a way to work it out. Is that kind of what you're referring to?
yes. In fact, there's a lot of banks and credit unions who won't lend outside of VA's published guidelines, but we do, right? Because we've talked to VA, the Roanoke branch especially, several times, and every time they side with the veteran. So if you have any odd scenario, or maybe there's a credit union, I know there's a couple local credit unions that we compete with on these, and we've taken several from them and have been able to do them.
Okay, so I know there's a huge deal right now in the market where a lot of agents are actually advertising, and we're just going to talk about assumptions to start with. Number one, what is the impact to the veteran when they offer an assumption of their VA loan to somebody else? And, generally speaking, how does something like that work?
So and a lot of people don't know this, so I don't know. I've seen these advertisements too, and I often wonder if they understand the full capacity of it. You still have to qualify with your lender. So you're not just signing it over. So you're still qualifying with your lender. We still update it with the VA as well. So the new person taking over the note, it's eligible, right? It's out there, but the person assuming the note will still be subject to qualifying for the VA loan. So yes, they are assumable, and they have that clause, but the person selling the home that has the VA loan, they're gonna have to work with their servicer to get the new person qualified. So I have seen that. I often think, well, I would rather have my own terms because then you're assuming the other person's financing. But right now I understand rates. It can be appealing to have a 3% rate over a 6% rate. So it just depends on the situation. But they're still going to have to go through qualifying either way.
So what does that do to let's say the seller is a veteran, he's allowing them to assume his VA status. What does that actually do to the veteran?
It'll release the veterans entitlement. So like they've gotten charged entitlement and they'll be able to go and get a new property because it's taking them completely off the loan.
Okay, so in the
Not
case,
for it
is
anymore.
that only in the case of if another veteran takes over, or is that in the case of just anybody taking over?
It would have to be, there's qualification parameters and it would be the case of another veteran taking over. Yeah.
Okay, so that restores their eligibility if another veteran's buying it. But if, for example, I'm not a veteran, if I were to actually go in and try to buy this home from a veteran, would they lose their entitlement at that point?
No. And I would have to look, we'd probably have to talk to the servicing department here I believe there's some parameters around that even, as far as, I don't think a veteran, non-veteran could assume it, but I'd have to see what our internal overlays would be around that.
Okay,
But yeah, you wouldn't, typically you don't have a non-veteran taking over a veteran loan.
so generally speaking, it's going to be a veteran taking over a veteran's loan, not somebody who's non-veteran taking over a veteran's loan.
Right.
Okay, well, that's interesting. I know that there's a lot of that being advertised. I know FHA does some of that too, but that's for another
They do.
discussion, another time. So,
Well, and that's actually a common theme right now too. I'm seeing, we actually had somebody just talk to our servicing department regarding that on FHA. So it is very popular, FHA, which has a, FHA is much simpler in the sense of who can qualify for it. So you're not limited to just another veteran.
okay, so building off of this concept though, when you're making an assumption like that, you're in essence, let's say they're selling it for 400,000, but the veteran has a loan for 300. They're not assuming it starting over at 400. They're assuming it at 300. Is that correct?
Mhm. So
So,
I think what's being advertised is they're saying take over the 300 and then pay us the difference.
right.
Yeah,
Okay.
that's what and I get it if you have that kind of savings built up to where you can do that, because then you're taking over at a 2-3% rate most likely,
Mm-hmm.
which would be appealing, but you're not going to have a ton of buyers fitting into that.
Right. Yeah, that's a little bit more complex when you start getting into something like that, no doubt. Okay. So now this begs the other question, because once they depart that residence, if their entitlement is still, let's say they buy another, or trying to buy another home, we've had that recently happen where a veteran is outgrown the home they're in, they want to buy another home in the neighborhood or not too far away from where the current one is. How does that affect them? Can they, I know FHA has a requirement, you have to be a certain distance, a house size, et cetera, et cetera. What does that do for a veteran? Can they buy another home and still use the VA?
If they have enough entitlement, so it all comes out to entitlement charges and coverage. We have to have 25% coverage on the loan minimum. So, and it's so funny because this is a common conversation among underwriters, even because it gets kind of complex with entitlement charges and what's used. And there's a whole worksheet we have to do in underwriting. But yes, you can have, we had somebody that had 3 VA loans, and they were moving every couple of years, building up their rental portfolio, but they had enough entitlement every time and enough money down to where they could make it happen. So really, that's what it boils down to. If you have, I know they have a one-time restoration for VA, so you can get yours restored and then you have full entitlement again if you sell the property. But let's say you have prior entitlement charge and then you're going to buy a new house. It'll just depend on how much house you're buying, the county loan limit, because I think it's based off 25% at that point if you have prior entitlement charge.
Mhm.
And then it'll based on what loan amount you have. So it's going to vary from county to county, but and from loan amount to loan amount. So you may have somebody that maybe they do have enough entitlement to cover 90% loan, but not 100% loan. And sometimes you'll have enough to cover 100%.
So
You
then
know,
what I'm hearing you say then is that you could actually continue to use the VA loan, even if you don't have 100% entitlement, you just have to bring some money to the table.
yes.
And now that would be a benefit to somebody. I mean, I'm just kind of thinking through that because there's still no mortgage insurance,
Right.
even if it's 10% down. And so as long as they can come with that 10%, and the interest rates tend to be very attractive.
Right.
And if I remember right, if they have a certain amount of disability through the VA, they can actually waive the funding fee and build all sorts of other things out of that.
Yep, and there's a lot of that, and we've been seeing a lot of savvy military purchasing going on lately, and having multiple homes and building rental portfolios. So it is a good market to dive into.
Okay, and speaking of rentals, uh, I've actually helped several people buy multi-units. Tell us how that works when it comes to multi-units.
It's the same qualifying up to 4 units. You have, I mean, again, coverage of entitlement. You're trying to use now. Multi-unit with VA is a little different. I know FHA just changed their guidelines, conforming just changed their guidelines, but it depends on the structure and setup and what they're trying to do. So are they trying to use rental income from the subject property? Do they need it, right? So VA did not just change their guidelines on that, but FHA did, if that's what you're thinking of. So they're allowing that now. If you're buying a 2 to 4 unit and you need to use the rental income from the other units to qualify, it has to make sense, right? I mean, it still has to make sense to utilize it. VA has not updated their guidelines yet. I could see that happening fairly soon. Yeah, what else would be helpful in that
So how would
arena?
that currently work then? If they're buying a multi-unit, let's say it's a triplex, and they're going to live in one of the units, the payment's going to be $3,000, and they can get $1,000 per unit minus the one they're living in. Can they use that $2,000 to help offset the payment?
They can use it to offset, right? Like you can't use it for rental income qualifying on anything under 2 years. If you don't have a history of rental income of 2
Mhm.
years on VA,
Mhm.
they'll let you offset the additional expense, but they will not let you use it as actual rental income. Whereas conforming in FHA will allow some rental income under certain contexts. So,
Yeah, okay, so that's perfect then. So that could actually, I've actually helped a couple veterans do this where they buy a duplex, triplex, and they're going to live in one, and then they offset a good part of their payment with that, and it makes it much more affordable, and it also turns into the first of their, rental empire. And so
right.
that's actually not a bad way to go when it comes to that. And so is there any effect can they do 100% financing on something like that?
Yes, I don't, you're quizzing me real quick. I don't think there's any provisions against 100%. There's no overlays. We don't have any overlays.
Okay, well, that's pretty awesome. And so how would that rental be set up for that then? How would we guesstimate how much rent they can get out of something?
Oh, that's gonna be on the appraisal itself. So,
Okay. Mhm.
mm,
So the
yeah,
appraisal,
so the 1025, the form will say this unit 1, 2, and 3. It gives
mhm,
a market analysis of, unit 1 takes in 1,000, unit 2 takes in 980, unit 3 at 2 bedrooms takes in 1,500.
got
And
it.
then we use that figure to offset. We use that figure to offset.
Okay. So getting back to eligibility, because we kind of started there and we're starting to work our way back. I have a question about that specifically, which is so veterans have a tough time every now and then too, just like everybody else in the world. And ramen noodles sometimes isn't enough, and then they can end up losing the home as they're going through the process. Now, when they lose their home and it goes into foreclosure, what does that do to their entitlement? Can they still buy through the VA, or do they have to restore their entitlement?
So you will get a permanent entitlement charge, yes. I've had several that have had prior foreclosures. You're still gonna have to credit qualify, right? So you're not gonna be able to come to us tomorrow after a foreclosure. You'll have to credit qualify, but yes, you can. If you've had a prior foreclosure, you're credit qualifying and you have enough entitlement remaining to use on the new property, then yes, you
So they
can.
could reuse that. So in other words, if they used, I don't know, $100,000 of their entitlement before, there's still enough entitlement remaining,
Mhm.
possibly depending on the house and location, where they could get still 100% financing on the next house. Is that what I'm hearing?
Right, and we have seen that before, and it really is, if you have those situations, and you know this as a loan officer, the COE is one of the first things, the certificate of eligibility is one of the first things you want to look at for any veteran coming to you to buy a house, so.
Okay, we pull that through the VA when it comes there, and that's actually pretty easy. Most people have a hard time figuring out how to get their own certificate of eligibility.
They do.
All right, I'm going to open the floor. Any questions in regard to what we've talked about so far? You can go ahead and unmute yourself and go ahead and ask a question if you want. Otherwise, we're going to keep on going. Any questions regarding entitlements? No questions?
And they really are, they're very malleable. Most of my underwriters that do VA absolutely love them and they love doing loans for the veterans. So we will work our hardest to do them. I have seen us do some amazing setups for veterans because it is an of service loan and they do give us so much latitude. So definitely talk to Chris on any veteran loan for any sort of odd situation because we have done so many of them.
Mm-hmm. So let's talk a little bit about income and how that works with that, because I know that I've dealt with some people who are receiving the GI Bill and they're receiving, whether it's disability or they're getting a stipend or they're getting something else like that. Tell us how we can use that to help them qualify for the home.
So anything that's a recurring set income piece, we will use. So BA, housing, clothes, like I guess they have BAS, BAH on if they're actually active military. Any, I know they get all kinds of different pay when you're in the military for different things, right? You are on this, I don't know, team that is doing special ops for the next 2 years, right? We can use it as long as it's continuing. So, and we have put those, as long as we can, I mean, there may be some extra documentation we need just to make sure it is a continuing piece of income, but we absolutely will utilize it. So we can't use student loan income, right? We can't use that, but other parts of the GI Bill that would be considered income, taxable income, then we can use.